Hi everyone, pleasure to welcome you all for another webinar. Today we have a very interesting topic which we will be discussing. We get this query many times, so we thought that we will discuss about this in detail over a webinar. I have got my friend, my Singapore partner, Kineet from Singapore, and today we would be discussing about how creating a trust can help you to build a tax efficient structure and protect your global assets. So Singapore in the recent times has become a very preferred choice for people who want to create a trust and put their assets in a trust, uh, obviously for tax efficient structure and for other protection. So with this, I hand over to Kineet to start his presentation. Kineet, over to you, and thanks for joining in. And we are also live on Facebook. So if you have any queries, you can put your queries in the chat box, or you can put it on Facebook also, and we will try to answer those queries. Hi, Kineet, welcoming you. Kineet, you are on mute. I will just unmute you. Just unmute yourself.
Okay.
Yeah, perfect. Yeah.
Hi, everyone. Thanks a lot for introducing me again. So today's topic is a bit special. It's quite unusual from our usual compliance tax planning. But actually, today's topic also partly also related to some tax planning, but it's more for high net worth clients and established companies, and also for companies which have a great potential to grow in the future. So hence, maybe we can share more on. But today's topic mainly is on trustee services in Singapore. So practically, I think everyone is a bit having some question marks in their head now, as in asking what is a trust. So not holding back anyone, let's move on to the next slide. Okay, sorry. Okay. As you can see in my slide, this is a definition of a trust. What is a trust? Practically, a trust is a form of agreement, a legal agreement actually, between one party transferring his or her assets to an organization which is a trustee to actually handle his assets, so that be it in the event of anything happen to the owner, the assets which is held by the owner, or should I say held by the trustee, will be actually be taken care of and distributed according to the beneficiaries in his wish list or in his asset. But please do take note that actually assets held in trust actually technically do not fall under any estate planning or under any of the assets. Up to this point, any questions?
No, this it's fine, Kineet. So what you're saying is a trust is an agreement in which property is transferred from one person.
Yes, correct. Okay, so practically, as you can see, there are quite a few of these terms here. So hence, maybe I will go through all these basic terms, and you will get a better understanding.
Kineet, if you can give a basic explanation in terms of who is a settlor, who is a trustee, and who is a beneficiary.
No worries. I will do that in my next few slides.
Yeah. Okay.
Okay, technically, these are the prerequisite of a trust. In a trust, you need to have three different parties in order, or at least three different roles to fulfill a trust. Basically, we have the settlor, the trustee, and the beneficiary. So in this aspect, who is the settlor? Practically, for it is settlor is someone who actually owns the who owns the assets, be it the cash in the bank, or be it his properties, or be it his business, everything. So technically, he will transfer the legal ownership as a settlor and transfer to the trustee. And who is this trustee? Trustee is someone who has a legal ownership over whatever is transferred to him. And a trustee is usually an organization who has, in Singapore context, a capital market license and also a trustee license, so that they can held in trust of whatever properties being transferred to them to distribute according to the beneficiary, which is the third party. And in this case, in the trust, you definitely have the settlor and the trustee, so you also must need a beneficiary. And who is the beneficiary? A beneficiary can be you yourself or even the settlor. The settlor being the owner who will pass his legal ownership to the trustee so that they will take care of all his benefits in the event of anything happening to this settlor, and even to the settlor's immediate family or whoever he wished to pass on the benefits to. So that's why you have three roles here: the settlor, the trustee, and the beneficiary. So any questions from the ground?
No, that's fine. That's fine.
Yeah. So
Yeah.
just remember, we are using a bit of technical terms here along the way. Just remember these three terms: settlor, trustee, and the beneficiary.
Yeah. Yeah.
Okay, how does the component of a trust work? Basically, from the settlor point of view, the settlor will have to create the trust via a trustee company. So when one person who wish, any businessman or any rich, ultra rich man who wants to have a trust, basically he will be by default will be as a settlor. So basically he will transfer all his whatever assets he wishes to create into a trust, and then he will approach the trustee company. And down to the trustee company, this trustee company will be a regulated organization to be a qualified trustee, and definitely they will be the one who holds the legal title of all the trust asset. And the trust asset in this case is all the properties, the assets owned by the settlor, which will transfer their legal rights to this trustee company. And once this trustee is created, we will have the beneficiary who will be actually be indicated by the settlor. So for instance, if today Alok wishes to have create a trust worth 10 million USD. So through this 10 million USD, Alok can actually has his wish of his indicated list of beneficiary, probably to his parents, to his wife, and also to his children. Of course, not limited to immediate family members. You also can give it to your siblings and even to your niece and nephews or your extended families, whoever is part of this beneficiary. So practically, this is as good as a good estate planning for clients who wishes to actually leave a legacy behind when they pass on in the future. And
Okay.
yeah, I'll continue.
So when we transfer assets from individual ownership to a trust, do we have to create capital gain?
Okay, practically in Singapore, we do not have capital gain. So when the transfer of this ownership of this trustee, there won't be any capital gain involved in this aspect. So
Yeah.
clients can safely transfer their assets in Singapore, except that there may be some stamp duty issues here and there. But rest assured, with proper tax planning, all this can be actually be resolved within a good tax planner.
Okay. Okay. Perfect.
Yeah. Okay, so on the fourth component of a trust, you need a trust deed and also a trust asset. So practically, what is a trust deed and what's a trust asset? Maybe I can tell more on this of a trust deed. A trust deed is actually a written document which sets out the terms and conditions. So when a settlor who brings his transfer his assets to the trustee, he will definitely have to prepare a written document, which is actually a legal document to set up the terms and conditions. What are the terms and conditions? Such as who you, example, if I look, let's say, created a $10 million trust. So maybe this trust area will have to is able to distribute maybe up to $200,000 USD of funds to the beneficiary. So maybe 10%, such as example, if Alok has nominated his daughter, his son, and his wife, three parties as the beneficiary upon his pass away. So with this 10 million, out of this 10 million, the beneficiary will be entitled to, let's say, use $200,000 per year. And out of this $200,000, maybe 50% a portion to Alok's wife, and the remaining 50% will be divided equally between Alok's two surviving children or whoever it is. So these are such as example of terms and conditions which a trust deed has to be prepared upon setting up the trustee.
Okay.
And the fifth component is the trust asset. Practically, what is a trust asset actually? A trust asset is actually the asset or the property held in trust. So upon the trustee being created, whatever transferred from the settlor into the trustee is known as a trust asset. So it includes all the assets transferred by the settlor to the trustee, which I have actually mentioned. And this also include immovable and movable assets. Immovable assets such as your properties, movable assets such as your shares, your cash, and also your cars, whatever it is. So till this point, any questions from the ground?
No, it's fine, Kenneth. We can move on.
Okay, sure. Okay, before I move on to this type of trust, maybe I just want to let you guys have a better feel. Actually, besides, this is just a very basic introduction of trust, because there is also more to it, such as the validity of trust and the lifestyle of a trust. So not to bore you out with all these technical terms, just a quick information for you. Typically, a conventional trust will last between about 100 to 120 years, except for charitable trust, which has an infinite term. So there is no expiry on a charitable trust. But as for conventional trust, there will always be a lifestyle of about 100 to 120 years, which is the expiry date. However, in this trustee structure, we can actually assist to open infinite trust besides the charitable trust for families which has actually been transferring their wealth generations down to generations. So maybe later on I will touch more on this aspect also.
Okay.
Yeah. Okay. So sorry. Yeah. Okay, so these are some form of examples of the trust between a conventional trust and a premier trust. Technically, in the conventional trust, these are some of the items. We have the care trust, the investment trust, the asset protection trust, the insurance trust, and I also talk on the private charitable trust and business succession trust. And much more on the newer modern version, the premier trust, we have a dynasty trust. Yeah, this is something which you can create it to last beyond even 100 years, 120 years, but that will need a proper planning between the trustee officers and also between the SETTLOR. And there's also a family office trust, which is quite popular for high net worth families, probably to transfer all their business into here and even the assets as a family office, so that for tax planning wise, for tax savings wise, all this can be put under the family office trust. And obviously, we should talk about is the charitable trust for non-profit organization. And there's also offshore trust. So the more popular one, which we will be touching on today, is a combination between the insurance trust, a business succession trust, and a dynasty trust plus a family office trust. These are the four trusts which we have combined to one later on into one big consolidation to showcase how a good trust can be designed upon. Okay, as I mentioned, we'll be combining a few of it. So I'll just give you a brief introduction of what is a business succession trust, which is a conventional way of trust. Practically, is business succession trust is actually between, let's say you have two partners or even three partners in a business. So maybe for instance, I'll take an example of me and Alok. If today me and Alok comes together and let's say we form a business, maybe an IT company. So me and Alok are the brainchild of this IT software. Maybe we have this software called tax mantra software. So in order to have, we are the brainchild, as we are the brainchild and the original owner of tax mantra software, definitely we do not wish that our efforts will go to waste if suddenly today I pass away and only left with Alok alone. And obviously by nature, by default, if I do not have a will, do not have a trust, or whatever assets I own in my name, will actually goes to my immediate family members, which I think it will be unfair to Alok. If let's say my family members come in and meddle with Alok's software and spoil the whole business, then there goes the whole business. So in a conventional business succession trust, practically if let's say if me and Alok has already designed a software that is very successful, we can go into a business succession trust, whereby such a trust is an arrangement whereby the business partners agrees to transfer the shares to the surviving partner in the event of one partner being passed on. And in this case, usually we'll be buying a key man insurance, and this key man insurance will be transferred into a business succession trust, and practically the trust administration will take effect upon the triggering event such as one of the partner passing away. And also the benefits of this business succession trust, it will ensure non-interruption, zero interruption to the business in the event of any one partner passing away also. So hence, practically, this is also a good thing, also a form of protection. Your business is in good hands, and also with the payout of the insurance upon once dismissal from this succession trust, you can pass and the benefits will be passed over to family members to in exchange for the surviving partners shareholding in the business. So till this point, you guys understand about this business succession trust?
Yeah, Kenneth. Yeah, it's fine.
Yeah. Okay. Okay. Next, which is I'm also talking about is this dynasty trust premium. Okay. Practically is a very modern thing whereby I believe people who live in this modern world, they want to have a last long legacy in their business dynasty and even in leaving a huge legacy. I believe you guys have heard of the Rockefeller, the Rothschild family, and some other rich known families. Yeah, practically, how come they have been surviving? Their legacy has been surviving for the last 200 to 300 years. Is mainly because of the trust created by this form of dynasty trust. So actually, this is a private purpose trust designed to last beyond the time permitted. The time permitted is only up to 100 years or 120 years, depending on the jurisdiction. So for instance, if you after 1 century or 100 years later, you wish that your legacy can live on. So I believe in this aspect, a dynasty trust would actually can help your legacy and even your wealth to last beyond the permitted time of 100 years. So this is actually a very special trust which lasts beyond generations to more than 3 or 4 generations. Although in our Asia context, there's a saying that wealth does not last more than 3 generations. But through this dynasty trust, it is meant to design to last more than 3 generations and even up to the 4th or 5th or even 6th generations, which is easily more than 100 years later. So if any rich businessman or ultra high net worth rich businessman who wants to leave a strong legacy behind beyond 100 years, a dynasty trust would be highly recommendable for this. Yeah, any questions?
So, Kenneth, just one thing. So,
Yes.
so what is the at what rate the trusts are taxed in Singapore?
Okay, basically, whatever income generated from the trust, let's say, for instance, we have already transferred all the assets. Let's say the property, mainly, let's say we have transferred assets, the property, maybe the property is transferred. So whatever income generated from the property, this will have to pay the standard normal property tax, the corporate tax, whatever tax is required to be paid under. So the trust is just like as a legal owner which holds the ownership of the assets. So they are just like a normal corporation which pays corporate tax. Just that this trust is actually to help to protect your assets from being sold off by your descendants or being so-called mismanaged by your descendants. So this is also a trust. The main purpose is actually to help to have an asset protection and also a legacy protection throughout one's life, even beyond his beyond after he's passed away.
Okay, okay, I get it. So so we don't have so basically once you pull in the assets in the trust, it is very difficult for someone to go and sell off the because there are
Yes,
procedures.
correct. But obviously, later on, maybe on my next few slides, I'll talk about how does trust also help you to save taxes, because that is on the family trust and also on the trust structure, which we have in Singapore, and it's a tax incentive given by the MAS, Monetary Authority of Singapore also. So I'll touch on that on my later slides.
Okay.
Yeah. Okay, next, this is a very popular request from a lot of clients, be it in Singapore, be it from overseas. It's called family office trust. This is not something new, but it's also not something too modern. But over the years, this family office trust structure has evolved into a way for ultra high net worth clients to actually have a good tax planning and park their business assets into this family office trust. End up with a certain amount of funds being committed into this family office trust, let's say in Singapore, then the central bank will actually be, or should I say EDB, will be able to grant you a certain tax exemption status in this family office trust if you're able to commit X amount of dollars. So for this, maybe let me elaborate more on what is a family office trust. Practically, a family office trust is a trust actually which enables family members and other appointed professionals, such as lawyers, accountants, investment bankers, and so on, to be part of this committee member to manage the family-based trust. So practically, I believe the family office trust you've heard of is like a Rothschild, Rockefeller family office trust. These are all the well-known family office trusts which actually they have been leveraged on for the last few hundred years. So that's why the descendants are easily millionaires or even billionaires around the world. So I believe with a proper family office trust, you can save on the tax and you also can pass on your wealth generations after generations. And usually beneficiaries are allowed to be appointed as an executive or non-executive directors, and also entitlement to get salary and dividends as decided by the committee. So definitely in the family office trust, you need a family office committee and you have the beneficiaries also. And moreover, actually, usually competent beneficiaries usually can be appointed to the managing director. So for instance, if today I set up a trust and a family office trust, should I say, and if let's say I have a son who is capable to manage, so upon my pass on, if he has met a certain criteria as the competency test, to pass the competency test, he can be appointed as the managing director of this family office trust to take care of the family office assets. So usually in a family office trust, besides having the traditional SETTLOR, the trustee and the beneficiary, and in this case, you will also need to set up an organization to look after the family's business interests, including your tax and estate planning. So a family office trust is very similar like running a business organization, a corporate organization, to actually to run all the business business daily affairs. And usually, these are all in the family office trust. Usually, are run by external professionals reporting to the successor, and it can be used for single family or multi-family. Especially in Asia, some families they have a very large extended families, such as maybe having 2 or 3 wives. Especially recently in Macau, the king of casino, Stanley Ho, has passed on, and basically he has set up a family office trust to ensure that his wealth and the benefits are evenly spread across 4 different wives and 4 different families. Any up to here? Any questions raised?
No, Kenneth, it's fine. We can move ahead.
Okay. Yeah. So family office trust is a very interesting topic, and we can actually go on a separate topic one day by itself, because they have many tax planning, and I can show you on my next slide where this is how a family office trust can be combined with other conventional trusts to form a legacy trust actually. Yeah, and this is something which we have drawn up between insurance trust combined with family office trust. Actually, it is also combined with a dynasty trust. Dynasty trust. Practically, why we have an insurance component here is the policy owner, which is actually the trust itself, will be the trust person, and this will be the trustee is usually the trust company and the insurance coverage. So at this point here, the trust company will actually purchase insurance, usually a universal life insurance component here, and this insurance will have investment value over here, which will be a fund. And as the funds pass it down, this can be also be run into invest into companies of your own choice. You can even invest into your own company also. So practically, for very tax complicated clients and for tax planning reasons, usually we will recommend clients to take out this insurance plus family office trust combination. Reason being is because if you committed to X amount of dollars in setting up such structure in Singapore, you will be granted certain tax exemptions by the central bank, also by the Economical Development Board agency. Hence, this is how the whole trust structure for it to be. But obviously, in greater details, we have to explain you in face-to-face, and with a proper tax planning, then that will easier help you to digest into your tax planning purpose also.
Okay.
Yeah. Okay, for all this instance here, practically we can actually assist you because we are also a distributing agent as a trust company and also as a fund house asset manager company. And in terms of the assets over here, why I said early on when I touch base when the if the trust company purchase an insurance policy, which is actually in the name of the SETTLOR. So practically, there is always a fund component to get investment, as we know that all life insurance will have an investment component to generate your payout upon your pass away. So this is not a typical normal life insurance. This is the universal life insurance component here. And usually people who purchase such amount will be easily 10 or 20 million dollars USD. And with the funds allocated, the insurance company being instructed will have the obligation to invest into a different type of assets. And this can be instructed also by the SETTLOR via the trustee company to invest either into your own company or into some external companies of your choice. So that whatever income generated is remitted back into the funds and later on into a payout.
Okay. This is a very nicely explained, Kenneth. Thank you.
Okay. So basically, what are the benefits of this structuring? Maybe I can show you that also.
Yeah.
Okay. Benefits of this is as the manager and insurance company selection. So practically, this where the client, which is SETTLOR, or should I say the owner of the trustee, the SETTLOR, they has a discretion to select who is your who you want it to be an asset manager, who you want it to be an insurance company. You can choose the company such as Prudential, AIA, or even some other local insurance company which is capable to handle a large amount of life insurance. And the asset manager, you can choose whoever your banker is. You can choose JP Morgan, you can choose Deutsche Bank, whoever is your investment banker also can. Or you can choose some local fund manager like the maybe some global fund manager like Henderson Fund or Templeton Fund, whatever it is. So these are some of these things client which has the discretion, which is the SETTLOR. And in terms of the flexibility in investment, definitely also the SETTLOR, which is the client, determines the investment strategy and portfolio so that they can maximize the returns of the trust also. And also the client has the discretion to surrender the policy, which is the life insurance. Actually, when let's say usually in this case it's the universal life insurance, where if you hit a certain value, is more than the value exceeds the life assured sum, then client has the discretion to actually surrender the policy. And through such a structure, actually is a good thing for succession and estate planning. So it's actually meant to give your designated beneficiaries an allocation. So there won't be any dispute in the event that, let's say, for me, if I pass away, it's only I'm survived by my spouse and my 2 kids. So practically, there won't be a dispute whereby the spouse said, no, I'm the wife, I'm taking 100%, or we are the kids, we should be taking a higher pie of 70%. So through this trust structure, you can designate who and allocate how much of assets you want to leave behind to your surviving beneficiaries. And of course, I've talked about is through this structure is a tax optimization. Practically in Singapore, if you committed X amount of dollars, and the government will also grant you a certain tax optimization through tax deferral on income and capital gains, and also zero inheritance, wealth, and wealth tax. In Singapore, we have zero inheritance and wealth tax. So for overseas clients who set up a trust structure in Singapore and park their assets here, practically there is a zero inheritance and wealth tax because this has been scrapped like more than 10 years ago already. So that's why we welcome foreigners to set up a trust structure in Singapore. And via a trust structure, such a trust structure, basically there's asset protection. So your descendants, the beneficiaries, will not squander off your hard labor of wealth accumulated over your lifetime. And also, practically, there's also custodian, which is the trustee, is a regulated entity. So you need not have to worry about the custodian, which is the trustee, mismanage your funds also, because it's all regulated by the central bank. And definitely, sorry, last but not least, definitely there's the confidentiality. So practically, whenever the insurance is purchased, it's actually is in the name of the investor of the fund. So this will actually protect, give you a protection, and also a level of confidentiality to protect your personal rights and your personal secrecy also. Yeah, Alok, anything from here?
So in Singapore, anyways, so there is no inheritance tax and wealth tax in Singapore.
No, this has been scrapped off, I think, by 2009 or 2010. But I'm very, very sure by end of 2009, which is more than 10 years ago, Singapore has already scrapped off zero inheritance and wealth tax. Practically, it formed quite a small amount of our nation's coffer. So that's why the government find it's a small amount. So we have scrapped off this to save on the administrative costs also.
Okay, perfect. So I think I don't have any query, and it's been very informative. The presentation has been very informative, and I understand that trust helps in terms of managing the assets and legacy, and also in terms of confidentiality, which you rightly suggested.
Yes, correct.
And there is
actually for these structures, we have clients coming to us when they initially in their own home country, they met out with very sophisticated tax issue with the tax authority back in your home country. I shall not name which country it is, but I can share a bit more here, some examples. Actually, one of my clients, he has a very huge tax issue with the home country tax authority, and the tax amount involved, the tax amount involved is easily $100 million. So, however, his assets is almost freeze off by the home country tax authority. But however, because he has an entity in Singapore, but the tax authority in the home country wasn't that convinced at all. Hence, we even applied the TRC, the tax residency certificate. In Singapore called COR, certificate of residency, and it's still not yet convinced, because the home country tax authority came back with a reason saying that it's a tax avoidance issue, it's so and so. So before the assets was being freeze off by the home country tax authority, we did a recommendation to the client, and they set up a tax structure in this way, which I've just presented, which is this structure.
Okay, I get it. Yeah.
And through this structure, NLD transfer his legal ownership of the assets to this structure here. And from here on, the trustee company, along with all the professionals, the accountants, the lawyers, derive out of a solution and contest the case in the home country of the client. End up, the case was successfully defended, and immediately they have transferred out the assets into this Singapore trust structure, and the client managed to secure his assets, and also probably in future when he pass on, he can actually pass down to his beneficiaries also. And at the same time also, whatever the profits, or should I say the income earned inside this trust, he will continue to enjoy it along with his appointed beneficiary beside himself.
I think that's very important, Kenneth, because the structuring is so critical. So proper structuring is required. Then only the benefit of trust will happen, and that's where our expertise comes in.
Yes, correct. So I strongly recommend clients, especially from New Delhi, Mumbai, or even Kolkata, where I believe these are the top 3 Indian state economies, which can actually generate, which forms almost like half of the whole Indian economy. People who have high net worth value, or ultra high net worth values, or even up and growing middle class. It's good that you can consider Singapore to set up this structure, so that in future you can pass on your legacy, your wealth to your kids and to your kids' generation. So you can pass on generations after generations, so that at least your legacy can live on. Just like I believe everyone wants to have a strong legacy to live forever and forever. Just like maybe like Gandhi or Martin Luther King, or these are some of these well-known people whose legacy live on and on. So I believe if you guys have such an interest and such a personality, then trust would be a good way to start off with. And actually, you don't need to have a huge asset to start off with a trust. Maybe a $500,000 USD, you can start a basic trust in Singapore. And along the way, as you build up this trust, you can still add on and upgrade to let's say a family office trust, and maybe even later on the one which I've shown on those combination multi-combination trusts.
Yeah, yeah, yeah. So I think good one, Kineet, and I think we all have got a lot of information today in terms of what it takes to build a trust in Singapore and what are the advantages of a trust in Singapore. I think and if there are any queries, I'm just pinging in my email ID, and if you have any queries, all the audience, whether they are on Facebook, because I see lot of activity on Facebook also, so you can connect with us and we will be more than happy to help you to understand more about this. And I think with this, we end this webinar, today's webinar, and come back to you soon with other topics. Thanks, Kineet, for taking out this time.
Yeah,
And
thank
I know
you.
you are
Yeah,
very busy. June end is
yeah,
always busy for you in Singapore,
yeah.
and because of the filings, and also there are additional challenges this year because of COVID. So
Correct,
thanks
correct.
for thanks for taking out time today, and thanks
No
everyone for
worries.
joining in. And we will
Yeah,
come back soon with more topics. I hope that you have got more information on trust, and we continue to help you to get more information and structure your tax and your efficient structure. With that, I uh, close this webinar today. And again, thanks everyone for joining in, and also Kineet.
yeah. Thank you. Bye bye.
Bye.